Taiwan index holding on to gains of almost 0.7%, but Hang Seng, that's seeing a decline of around 0.8%.
A trade deficit of about 38 billion almost.
GST Council meeting on 21st of December in Jaisalmer is likely to have a packed agenda.
Range and the zone which we need to take out remains the same as I put out yesterday morning, 24,770.
So the fourth dividend has come at around 8 rupees 50 paise. The record date as well will be December 24th.
Piramal Pharma, the stock is up almost 80% so far in 2024.
So 24,600 on the Nifty and 53,440 on the Bank Nifty.
It may continue to do well. One is especially the renewable power sector.
But we do believe that as part of our strategy, we must deepen our technology presence.
Structurally, India's growth is much better than that of US.
Markets 175 points lower on the Nifty, just breached the 24,500 mark.
This year we are likely to look at maybe about 120 odd IPOs.
Sharp fall is what we are witnessing. The markets have come off from the highs.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, it's all fall down kind of a day today. 350 points down on the Nifty as we start this new edition of Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant with me, my colleagues Reema and Nigel. And guys, I don't think there's any particular reason or there's one kind of thing which is pushing markets off a little bit, right? I mean, it's generally a very downdrift kind of a day.
Well, it's a December syndrome, right? Everyone tells you that there's going to be a Santa Claus rally. But if you look at the last 4 or 5 years, every December you have a fall of around 500 points on an average. So maybe it's just fulfilling that. You know, last year as well, we had that fall. The previous 4 years as well, I did check. We either had a fall of around 5, sometimes even 1,000 points. So I would term it as a December syndrome. Sometimes lower volumes, sometimes in fact maybe a higher number of sellers. So maybe we're just fulfilling that ahead of the big event, which is the Fed. That's
there are 22 central bankers meeting this week. So it's not just the Fed, though many of those 22 are linked to what the Fed is going to do. Yeah. But you've got Bank of Japan, you've got Bank of England, and of course, FOMC takes center stage.
Which is the other 18 or 19. But yeah, I mean, it's just maybe just a bit of a drift down. And unlike yesterday, it's not as if the broader market, yesterday did not feel like the market was down. I mean, to be fair, yesterday the Nifty was down just 100. Today it's down 350. So that is, the starting point is different. And of course, yesterday you had the broader market, which was higher, which is not the case today. So as I said, it's all largely on the lower side. So the Nifty is basically back at the 20-day moving average. The 20-day itself is rising a little bit, but on last Friday, when the markets saw that sharp sell-off, it hit the 20, exactly the 20, and then bounced. And the Nifty is basically back there. 24,314 is the 20-day moving average. We're at 24,319, almost exactly back at that moving average. Nifty Bank, about 1% separates the Nifty Bank where it is now and the 20-day on it. That is 52,576. Actually, not even 1%. It's 200 odd points, basically, to less than 200 points on the Nifty Bank away from the 20 days. Again, here also on Friday, we had that touch and then we had a bounce. So repeat performance or something different, we'll have to see. Top losing sectors, PSU banks, energy, private banks, metals. Actually, very few things are higher. And I looked at the global screen. There isn't, as I said, there's no one reason. I mean, you want to nitpick, you can say the dollar is ticking higher a little bit, but is that really the reason? It's back above the 107 odd level. We left off at about 106.85, but that is, I mean, slightly higher across Asia this afternoon. Reema.
Well, Asia started off trade higher, but by the close of trade, Asia is also lower in trade. So Shanghai is down about 3/4 of a percentage point. Hang Seng, Nikkei, Taiwan, all drifting lower by the close of trade. Again, nowhere in Asia do you have a cut of more than 1%. For Hang Seng, it was about 0.5%, a little more for China. That was down about 3/4 of a percentage point. But the color across Asia was also red today, and the color across Europe is also red. Again, it's not a deep red like we are seeing back home in India. The level I'm watching is Friday's intraday low, and that was 24,180. From the level of 24,180, we rebounded. So that's going to be on the way down. One number to watch. In terms of the large cap action, there are only two Nifty stocks in the green. One of them is Cipla, and that's on account of that upgrade coming through, a buy on Cipla, I think from Kotak. And the second one is ITC. That's up nearly 0.3% as ITC has set 1st of January as the demerger date for the date for the hotel demerger. So there is an important step towards the hotel demerger that came just before 12 o'clock. You saw that intraday spike in the stock, and ITC so far at least is managing to hold up in the green. But other than that, 48 out of the Nifty 50 are in the red. Losses are led by Shriram Finance. Bharti Airtel is correcting for the last 2 days. IT is on the back foot. Banks are underperforming in line with the frontline indices. Nifty Bank is down 1.5%. Reliance Industries too is a bit of an underperformer.
Well, that's right, Rima. But from the broader markets, there are so many winners. The breadth has gone negative, but otherwise so many winners. Just pull up a few. Fairchem Organics, we don't talk about the stock very often. That's up close to 20%. Two new listings, Enviro Infra, that one in fact is up close to around 10%. From its IPO price, the stock has moved up. I guess it has to be a factor of free float because bankers can't get the pricing so horribly wrong. It's moved up very, very smartly and volumes are very large right now. Gala Precision Engineering, that's another stock that's up close to 13%. I think that as well was a new listing this year itself. So that one has moved up. Kalyani Steel is another one that's moving up. And Blue Jet Healthcare, that as well is up close to around 8.5%. So plenty of winners actually from the broader markets on a day when the headline index is actually lower. Talking about special situations, you spoke about ITC. Well, Shankara Bilcon, that's another one that has a special situation. That's a demerger is in the works. And the stock, after being a big underperformer, I think it went down to around 500 rupees odd. And post its con call, the stock has jumped up. So ITC is higher because of the special situation that's playing up. Shankara is up close to around 4% in a wobbly market. You pull up the last 1 month chart. I recall the stock had gone to around 500 rupees. From there, that as well has moved up. I think it has an element of that special situation that needs to play out here. That's why as well that stock is up. APL Apollo Tubes, well, they have a stake in this company as well. We asked them whether or not they want to increase stake. They said as of now, there is no plans on that front, but keep an eye out on that one as well. How do you position yourself though in the final hour of trade? Mitesh Thakkar is with us. Hi, Mitesh. Good afternoon. What do you do? Buy the dip or stay away?
Well, we haven't bought the dip yet, because one, the Nifty is below 24, 500, 450 zone, and that is not a very good sign. And the next support is right there actually, 24,300, followed by 23,950. So I'm just hoping that this 24,300 level holds. Otherwise, we might actually get into a negative trend as well. So let's see how it goes from here. But for the timing, I think till we see some kind of a reversal, I don't think it's a good idea to buy the dip. So we are avoiding that very clearly. Trading stock specific bias, and even there, what has happened is that with this decline, I think we've also explored adding some short positions and having equal balance of nearly long and short position on the stock side.
Let's talk about some of the losers, RBL Bank and Chola Mandalam. But before that, Mitesh, you want to tell us the stocks that you have on your radar?
On the radar, I have is Steel Authority, which is a negative or a sell call with a stop at about 124.5 for targets of 115. And the only sector, where there's some kind of comfort to go long is IT, and Info Edge and Naukri is on the buying side. Keep a stop at about 87.60, look for targets for around 9.
Got that. Let's talk about RBL Bank and Chola Mandalam. They're in focus on the back of brokerage notes. RBL Bank has cut its growth guidance and there is a downgrade for Chola Mandalam. Abhishek is here with the details.
Well, Rima, RBL Bank was present at the Citi conference wherein they have cut the loan growth guidance. So Citi has a buy recommendation, target price of 255 per share. Now, the key takeaways from RBL Bank's management meet with investors is that the MFI's SMA0 loan due between 0 to 30 days, that's at 3.1%. SMA1, which is 30 to 60 days overdues, they are at 2.45%. And SMA2, which is 60 to 90 days, that's at 1.5%. 95%. So there is lag collection efficiency. Anything below 98% is a lag collection efficiency in microfinance, and that's at 97.7 to 97.8%, which suggests that there will be spillover of slippages or credit costs going into Q3 and Q4 for the lender. So some improvement anticipated in credit card slippages, but month-on-month improvement is expected, but it will remain elevated is what Citi is writing. Net interest margin will be under pressure and can contract further in Q3 FY25. They also say that with elevated stress, slowdown in unsecured segment, constraint on capital and return ratios, they can now expect a modest low double-digit growth. Remember that RBL Bank post their Q2 FY25 in the con call did mention that they will grow at 18 to 20%. So this is a downgrade of the growth rate that they have now mentioned that it will be in low double-digit versus 18 to 20% that they had targeted earlier for FY25. Now, InCred has written on Cholamandalam as well. They have downgraded it to hold from add. They have cut the target price to 1300 per share from 1550 that they had earlier. They said that the risk reward is unfavorable amid the fact that there is slowdown in the growth and there is a deterioration in asset quality seen. So overall, there is weak demand for CVs, that is commercial vehicles, coupled with rising discount that can impact the overall disbursements for the lender. So they expect consolidation in the new business amidst the business volatility that you are seeing for Cholamandalam. So cautious with respect to rising asset quality stress. They observe that there is overlap between microfinance and used CV financing that Cholamandalam does. Both the customers, there is an overlap. So falling interest rate cycle will benefit NIM. However, that can be offset by the rise in OPEX that they might see. So they cut their earning estimate between 3.5% to 5.5% over the next few fiscals for Cholamandalam. Back to you.
Okay, all right. Abhishek, thank you very much for that. I'm good getting that detail from you. Gautam Dugar is now with us. He's head of research at Motilal Oswal Financial Services. Gautam, good to have you with us here. Good afternoon. Thanks for your time. Prashant this side. Before we get to the broader market and overall earnings expectations, etc., let's talk about some of your recent reports, right? I think you guys initiated on PN Gadgil recently. There was the coverage on Swiggy as well. And one thing kind of is common, both very different sectors, both in the consumer space, but one common thread is, compared to the leader in that space, in the respective areas, both are at a discount. PN Gadgil probably the cheapest stock in the jewelry sort of space, and Swiggy, big discount to what Zomato is trading at. Is that kind of so my question is, comment on PN Gadgil, how strongly do you feel about this theme and the stock per se? And Swiggy, did you anticipate this kind of a move so sharply and so quickly? Go on, Gautam.
Yeah, hi Prashant, good afternoon. So, see, jewelry is something which we've been liking for more than a decade now, and within that, Titan, Kalyan have been our preferred ideas. Titan for almost 15 years, Kalyan we've recently covered, added in the model portfolio. Stock moved up 80% in 3 months, so we've trimmed that position. As far as PN Gadgil is concerned, you're right, it is still trading at a discount. But do remember that a lot of these companies, when they list, initially they trade at a discount to the sector leaders. And as there is more history of their performance which is available, as the quarters pass by, as you see the actual performance, then slowly the market starts re-rating them, right? So absolutely no doubt, jewelry, both from a medium to long term as well as a short term perspective, we continue to like, because the wedding season is going to be mammoth. You have about 48 lakh weddings scheduled in the next 5 to 6 months. So the entire space will remain very vibrant in our view. Specific to PN Gadgil, I think they've done very rapid expansion. I remember in the Navratras, they opened 9 stores in 9 days. And plus their same store sales growth is also picking up quite well. So that's a space where we remain positive, have been positive for a very long period of time. As far as Swiggy is concerned, no, we didn't expect such a sharp rise post-listing. But see, Prashant, quick commerce as a sector is growing at a very high clip of growth rates compared to your other consumer categories, which are actually struggling. You've heard ad nauseum about the slowdown in urban consumption, the struggle of consumer staple companies for last 2-3 years now, or if I can stretch, if you look at the last decade, the trailing 10-year, compounded revenue growth of the consumer staple companies is sub 10%. So that's very substandard in that sense. In front of that, if you see quick commerce, you're seeing growth rates in excess of 30%. And the expectation of the next decade is that they'll continue to grow at 18 to 20% at least. And we've seen in some of those cases like Zomato's and all, where the moment growth rates kept climbing up, the benefits of operating leverage have started trickling in. So when Zomato listed 3 years back compared to that and today, the financials, there is a huge difference. And of course, in between, you've seen Blinkit take up a huge portion of the total value. So no doubt in our mind that quick commerce as a space will become very big. In between, there will definitely be a lot of volatility and intermittent corrections that you will see. But yeah, to answer your specific question, Swiggy is not something where we expected such a sharp move of 40-odd% within a month of listing.
Gautam, hi. Lots of CEO presentations at your conference. You've done a deep dive across various sector, investor talk. Take us through some of the key highlights, insights that you learned over the last 2 days.
Yeah, so Rima, this is our 10th edition of Ideation Conference, and this is specific to only mid-caps and small caps, so a lot of interest here. You also remember that the mid-cap, small-cap indices have corrected less compared to Nifty. In fact, this is the first instance in the last 15 years. Whenever Nifty is corrected more than 10%, usually the mid and small-cap indices are always corrected much sharply, given the inherent volatility and float and all. This is the first instance where Nifty corrected more than 10%. I am talking about the levels somewhere about mid-November when Nifty was down more than 10% from its September highs. And mid and small cap indices were down much lesser compared to Nifty. In fact, as of yesterday's closing also, if you see, mid and small cap indices have hardly 2, 3, 4% away from their September highs. So there is tremendous interest in that space. And given the inflows that you are seeing in the domestic mutual fund side, clearly the mid and small cap funds, the thematic funds have attracted a lot of inflows. So one of the themes that appeals to us, and we published a very interesting thematic initiation on that space, is capital markets. So you've had a couple of capital market companies present here who've been talking about a long runway for growth ahead, given the financialization of savings which is playing out. You merge that with the innovation and technology disruption which is happening. So clearly, while those spaces have already seen a lot of run up in the last 6-12 months, if you plot the growth for next 3 to 5 years, there remains no doubt in our mind that whether it is AMC, wealth managers, exchanges, depositories, intermediaries, or even brokers, the growth prospects are pretty strong there. Secondly, we've seen a lot of interest coming in some of the niche tech spaces, healthcare companies, EMS, of course, we had a very wide representation from EMS spaces here. You've seen some of those stocks have hit new highs in the last week or so on the back of announcement of new tie-ups with various companies that they have done. So yes, I mean, and then of course industrials. So those are broadly the spaces: industrials, capital markets, healthcare, technology, and of course the broader financial space, which are finding very good interest amongst the investors who are attending our 10th edition of the Ideation Conference.
Hi Gautam, good afternoon. Always good to hear your thoughts. And that was a very valid point, right? Everyone's talking about the Nifty being 7-8% away from the fresh all-time highs. The small cap index is making fresh all-time highs almost on a day-to-day basis. So it's a big divergence in comparison to what we saw in the past. Since you're doing an generation ideation conference, the biggest line was for which company this time, Gautam? I haven't yet heard. Normally I get some sound bites from there. But highest amount of interest in which company, or if you could at least zero down on the sector?
So, Nigel, very tough to zero down on that because there are 50 companies, and virtually whichever meetings I have attended, I have seen 20-25 participants in every meeting. But yeah, I mean, capital market, industrials, EMS, those are three broad areas which are seeing maximum investor interest at our conference.
Okay, and EMS, in your, according to your research team, which is best placed? I mean, Dixon, people said expensive at 10,000, 12,000, 15,000. It's 18,000 today, and still there is so much interest, and there's a good growth outlook. So clearly, the street wants to latch on to this theme. Whether it's Dixon, PG, Electroplast. We had the management of Keynes earlier today as well, sounding extremely important. So what's the pecking order?
So we like Dixon the most. That's part of our model portfolio. and also a part of our top 15 ideas in the large cap space. It's crossed 1 lakh crore of market cap, and what a phenomenal journey they've had. IPO'd at 2,000 crore market cap in 2017. Of course, the company was very different then. Today, if you look at the top line, I think they're averaging somewhere about 37,000 crores of top line. The company has changed its complexion completely, and every few months they're getting new business, new client, new contract. So that remains our number one preferred idea. And then, of course, we like Amber as well as Keynes. So Keynes did participate in our conference. If you look at the numbers of Keynes also, in the first half, they did the profits which they did full year in FY24. So clearly, the growth rates are very high in some of these spaces, and which is where you are seeing markets ascribing them very high PE multiples, right? And not just the growth rates. I think the visibility of that growth rates from a medium-term point of view, at least next 3 to 4 years, the visibility is there. So which is why you're seeing such a solid interest in that space. And given that the government itself has been very, very pro, EMS rather, Make in India, manufacturing and PLI, those kind of things which the government has taken on priority. So clearly top down as well as bottom up, it marries very well for this space.
All right. What about, one stock I want to ask you about in particular is Trent. You all were on top of it, Gautam, and I think you were at the forefront, from much lower levels. They had one disappointment. People were trying to find a fault to the last quarter's numbers, and the stock went from 8,200, I think, to 6,300. It bounced back from there. At current pricing, what's the view, the brokerage, the call that you all have as a house?
We still like it. You're right. We upgraded the stock about 2.5 years back at 1,200 rupees. And since then, we've not changed our view. And the reason for not changing that view is clearly the growth differential. In this space, if you see Trent's peers, they're struggling to grow upwards of 15% on top line. Whereas Trent has consistently been printing top line growth upwards of 45-50%. And of course, bottom line has grown much sharper. So, and we've seen, and we've discussed this often in your shows, that in B2C spaces in India, wherever there is strong growth and more growth visibility, the market has been very generous in ascribing higher multiples. So whether it is Trent or Zomato or Varun Beverages or so many other companies representing the B2C segment, wherever growth has been sharp, the P multiple re-rating has also been equally sharper. And as far as Trent specifically is concerned, our view on the growth visibility remains very intact, led by Zudio as well as their core business. So yes, there has been some correction because market has also seen some correction and a little bit of a disappointment which was there. But the fact that the bar that Trent has set is so higher that even 60% growth seems like a disappointment. So that tells you what kind of journey they are on. As far as we are concerned, we think the growth is going to remain intact there. They're gaining market share, and in a category which is not growing so sharply, they've been able to extract that growth rates through innovation, through new store expansion, and execution excellence that they've displayed over the last few years. In fact, I think it's now part of the Nifty also. So the moot point is we like Trent still.
Okay. Thank you very much for joining in. Moving on now to Escorts Kubota. That's under pressure after Kotak Institutional Equity has issued a sell call. Sudarshan joins in with more.
So the stock has been under pressure recently from the record high that it hit in September 2024. From that level, stock has fallen 24%. Kotak Institutional Equities expects further 10% fall in the stock, and it has a sell call with a target of rupees 3,000 per share. Kotak Institutional Equities had a management meet, and after that, company has detailed out the outlook related to tractor industry as well as the construction equipment. For domestic tractor industry, it expects mid-single-digit growth for FY25. On the export front, it expects trend to remain weak, and even for the construction equipment, it believes that it's under pressure for the last few quarters. And Kotak Institutional believes that margin is expected to improve once integration of company with Kubota is completed, and company's focus remains on gaining the market share because in the last few quarters, it has lost market share to Mahindra & Mahindra in the tractor segment. So on the back of this, Kotak Institutional Equities has a sell call on the stock.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's introduce the Growth Code, a special initiative by Grow and CNBC-TV18. They have the aim of empowering investors as well as traders. Prominent investors and professional traders gathered at Grow's Trading Rights Summit on November 9th. They wanted to share their valuable insights as well as strategies. Here's a snippet of what pro trader Subhashish Panye, the CEO of Power of Stocks, had to say about the importance of diversification. Let's listen into him.
जीरो टू जीरो किसको बोला जाता है कि ना हाँ आपने एक बेट लगाया वो 100 टाइम ग्रो कर गया, ₹1 में खरीदा 200 में बेचा या 100 में बेचा ऑप्शंस के हिसाब से, ये हर दिन नहीं होगा। दैट्स वाई बोला जाता है कि नहीं यू हैव टू डाइवर्सिफाई। 15-20 स्टॉक लो, उसको बाद 15-20 साल बैठो, उसके अंदर थोड़ा सा और एनालिसिस एंड ऑल डाल दिए, क्योंकि आप इस फील्ड में हो तो करना पड़ेगा, डाल दिए तो आपको 2-4 स्टॉक मिल गया, आपका लाइफ बन गया। अगर राकेश झुंझुनवाला जी को पता होता है कि टाइटन ही जो मल्टी बैगर है, आपको नहीं लगता घर बेच के सारा पैसा डाल देते? लेकिन क्या ये स्टॉक उस टाइम पे 100% श्योर थे? हाँ, साइजेबल बेट के लिए रेडी थे। क्यों? क्योंकि उनको लग रहा था दिस कैन बी द स्टॉक, मेरे 15 स्टॉक में से ये एक स्टॉक होना चाहिए। यस और नो? आपका जीरो टू जीरो मतलब ये होता है कि नहीं 1 लाख मेरे पास है, डाल देते हैं, अगर 5 बना ठीक है, नहीं बना तो खत्म।
Okay, welcome back. The market's down about 360 points. And as we've been saying, I don't think there's any one reason. Actually, there isn't even a bunch of reasons. It's just a slow kind of drift lower that we have going on. And by the way, the Nifty is back to the daily averages. The 20-day is at 24,314 and we're at 24,313. So just about holding around those levels. Pathik Gandotra is with us, partner at Drone Capital Advisors. Pathik, good to have you back with us. Appreciate your time. As they say, half the job in investing is waiting. You've waited a long time for Gokuldas to perform. I mean, it's been a big winner for you. And it's even on a day like today, it's up 3.5%. This month, the stock is up about 30%. And after almost about 11, 12 months, about a year of doing nothing, the stock has come back alive. Any triggers here? Is it company specific or is it the right sector? What's the big tailwind? And what's the outlook for this one?
I'd prefer to speak about the sector, Prashant. I think it's more about the fact that, as I was saying earlier, that the retail demand in the US revived about 6 to 9 months back. And the major customers who had actually stocked up on their order books post-COVID and then were destocking for the last 2 years, that destocking has stopped and orders were coming. I think the CEOs of all the textile manufacturing companies, garments, and even home textiles for that matter, have actually said on your channel and have had made statements that demand is reviving and capacity is actually for the garment manufacturers are full for the next 3 to 4 quarters, and visibility is very high for the next 2 to 3 years. Having said that, there are also long-term triggers like the Bangladesh crisis, which may eventually lead up to some shift of demand. It's a long-term thing, but that might happen, and so those things improve multiples. Plus the China Plus One, which is getting even stronger given the change of the government at the new president at the US. Apart from that, there are these free trade agreements that India is signing with, or potentially signing with the UK, and then potentially over the next few years, even with the EU. So all these are very strong long-term triggers for the sector, and these impart visibility over decades, kind of thing for the sector. So that's why I guess the market is recognizing that. I think it's just begun. So we'll see.
This is begun. What are multiples at according to your? I mean, okay, you don't want to talk about Gokuldas specifically, so I won't go there. Got it. So that's one. The other is we had Gautam Dugard with us earlier, and we were talking about EMS companies, right? You were again an early investor in many of these. Dixon, you rode the first wave. I think names like PG Electroplast, etc. Specifically with, I don't know if you own any of them, but what's the outlook looking like now? So specifically for Dixon, this PLI scheme, right, is finishing. And I don't think there's any other, there's a PLI for components which will start. But that earlier PLI, which we don't know how much of it was just to get the industry started, and the industry is started and how. Do you think that finishing will make any difference? Or, I mean, they're large enough now and growth rates can continue 30, 40, 50% every year.
So look at the Chinese example. China did the same thing decades ago, that they initially gave support to the manufacturing sector in terms of incentives in whichever form, their own form of PLI. And once those companies became big, then they never needed anything like that. I think it's still early days for our EMS sector to, work without a PLI scheme. But I mean, PLI schemes are all product specific. So I don't want to comment on companies, but there are many more PLI schemes which will be launched in the EMS sector. And I think all these companies have now figured that a wide product bouquet, a wide product basket, and a wide ability to make different kind of products, I think serves them well. And which is what I guess all of them are doing. So you had the mobile phone PLI, you have the laptops PLI eventually, you're having on white goods. So all these are coming one by one. I think these will fuel growth for the sector. The point is, all these companies are majorly expensive in terms of multiples. So I think the growth is very essential to sustain these stock prices, is what I think.
All right. Hi, Prateek. Good afternoon and good to see you. And Prateek, what's your view on the banking and financial space? One part of the street believes valuations are attractive over there because a lot of these private sector banks didn't run away. They didn't participate in that big party out there. But the other part of the street says that, there'll be pain for the sector on the whole, which in turn will reflect in maybe an underperformance coming in from the sector. How are you all placed on the banking and financials?
So within the space, if you look at bank and finance earnings, I think the NPL cycle has come to the big NPL cycle had come to a close at least a year back, and so the numbers have started improving from at least from a credit cost perspective. Margins, however, are under pressure because savings are getting competed out to other asset classes, and so there's a race for deposits and for banks to maintain their margins. And as other asset classes take more and more of the money, they are competing with banks to fund the capex of the country, or to fund capex, or to fund working capital. So banks are at that kind of a competitive in a competitively disadvantaged position, maybe to fund all these assets. So I think margins for the banks are going to be are still going to be constrained. They don't have that kind of pricing power, and which is what I think is weighing down on most bank prices. Some of the banks are obviously different, and they have done well. I think it'll be continue to be a stock-specific kind of a sector. I don't think one can take a blanket view of an overtly bullish and overtly bearish view at the current point in time. Having said that, as interest rates come down, and then I think there is a chance that margins will improve because deposit rates may come down also. So I'd be more positive than negative on the sector, but not overtly bullish.
Okay. Do you want to give us the financial that you would like that has exposure to a particular sector, or housing finance or something on those lines, so we at least get a hint in terms of?
Generally, I think that in falling interest rates, finance companies do better than banks. Banks also do well, but finance companies always do better than banks. In falling, NBFCs, microfinance has always had its own NPL cycle, but generally speaking, NBFCs do better than banks. So if I play a financial on a falling interest rate kind of thesis, I would play an NBFC.
Okay, and MFI, you made money through MFIs as well, Pathik, in the past. Some worked out, some did not. Where do you think that cycle is? You think there's a couple of more quarters of pain?
Difficult to say, but I guess so. I've heard from industry sources that the asset quality has started stabilizing in the sector, but I'd like to see more data and more data over a period of time, because these NPL cycles never normalize so soon. So you have to wait and watch. And I wouldn't mind missing the first 20-30% of a rally, which is more of predictive in nature based on the fact that a cycle will turn. I'd rather wait for the cycle to turn before taking a bet.
Wires and cables, Pathik, right? That's the other space. I mean, it's kind of faded into the background. Maybe stock prices not so much, but any interest here? You think they're good bets, or?
At least the sector where the sector which benefits from housing capex, the wire sector. I think that will benefit because there's going to be a lot of demand there. Not only wires, even if you look at all the stuff that is used in like tiles and sanitary ware, etc., which are derivatives of real estate. I think those will also do well because in the initial in the initial part of the real estate cycle, builders do well because their homes sell. In the latter part, building material companies do well. So I think that is what is going to happen.
By the way, any one or two themes apart from what we've already discussed, which has caught your eye, which you think one should look for ideas in?
No, Prashant, I'm mostly a bottom-up person, so no big themes. I think all I can say is that the previous quarter was very disappointing in terms of earnings. So where you see earnings is where you'll see stock performance, and I see growth clearly in textiles and garments. I see growth in EMS also, and in a few more sectors where, and I mean these are two clear growth engines. I think IT I think might revive a bit because of also because of the AI theme that might also revive, but nothing spectacular in terms of growth. I think it'll all be mostly bottom up. One more thing I like to say that there are a lot of SME companies out there who are growing very, very strongly. So one should look for growth possibilities, and these companies from very small size have done very well, and once they're listed, you can use growth as an important trigger to buy into these companies. Thank you.
Okay, all right, Pathik, we'll leave it there. Thank you very much for joining us. Good speaking with you here on CNBC-TV18. Thanks for sort of taking out the time and being with us. We'll take a break. We'll come back, and as always, we'll get you what's happening in dealing rooms. Nimesh joins in with that, some technical trading ideas, and we've got an interesting sort of IPO takeaway as well. Frenzy in terms of primary market issuances, but we take a look back at what has happened over the last many years and what has performance been when you invest in IPOs. That's coming up.
Welcome back. Well, it's that time of the day where we get you Nimesh, who's here to tell us what he's picking up on D Street Chatter. And when Nimesh is at the conference, I believe, so he'll get an even better insight. Nimesh, fill us in.
Hi, Nigel. Under pressure today, largely led by the large caps. And within the large caps is the financials, which is dragging the markets down. And within financials, I guess, there is large pressure on the NBFC stocks today. Looks like the commentaries from the financial companies in various conferences hasn't gone down so well with the investor community. That seems to be the reason why the financials are under pressure today. While looking at the market, it may sound like there is an aggressive selling from the FIs, but contrary to that, the feedback that I'm picking up is that maybe there is a small MOC basket buying in the last 30 minutes in some select names. So that's something to track. So the institutional data could be quite interesting today. Again, it's a day of broader markets to relatively outperform. So while the index is down 0.5%, the mid-cap index, a lot of individual names are buzzing in trade today and are actually up in trade. So again, a day when the broader market stocks and mid-caps have relatively outperformed. Technically, the sense is that 24,350 is a crucial support level on the Nifty to watch out for. If that gets taken out, you will see further selling pressure. But again, this Friday, you'll have a liquidity event in terms of FTSE rebalancing and the sensex rebalancing. That will have an impact on some individual names. But broadly, looks like today's fall is largely led by large caps, and within that is the financials which are dragging the markets down.
All right. Nimesh, in terms of individual stocks, what's on your list today?
Well, Prashant, as I said, a lot of individual stocks in the broader markets are buzzing in trade. The first stock on my list is BF Utilities. We normally don't talk too much about the stock, but that's been buzzing off late. The volumes are on the higher side. In fact, I understand a very influential HNI investor has been aggressively buying in the last couple of weeks and months. So he's built up a large position in BF Utilities in the last couple of months is my sense. So that's the first name. The second stock is the DCX System. Again, Y2D the stock has done nothing. In fact, it's been negative year to date, but today the stock is buzzing in trade, up 10%. The volumes have picked up. I understand there are very strong buy flows as well. And in DCX System, the buzz is that maybe there could be a very large block deal in that particular stock very soon. So that's something to track there. The third name is Yatharth Hospital. Y2D the stock has done well. It's been buzzing off late as well. And looks like the company is very close to raising funds via QIP. So something to track in Yatharth Hospital. And the last name is Swiggy. Since listing, that stock has relatively outperformed the QSR space. Again, aggressive flows from larger FIs, you would understand. Yesterday also there was big move and a large volumes. And I understand a leading long-only FI has been an aggressive buyer in Swiggy of late, and hence you've seen a big up move in the last couple of days.
All right, Nimesh, thank you very much for that. So lots of interest in that quick commerce space, and Swiggy, of course, a big beneficiary since listing. Thank you again, Nimesh, with all that detail. Well, as I said, the primary market is red hot, but IIFL's recent study reveals the trends and performance of IPOs that have come in the last 5 years. Hormuz is here with the key highlights. Hormuz, over to you.
Well, it may be Christmas season, right? It may be New Year's season, but for the last 5 years, come rain, sun or cold, the one thing that has remained constant is IPOs. And that's what IIFL's latest study is all about. Now, IIFL has analyzed 263 IPOs since FY20, where 101 of them saw private equity exits and the others saw exits from non-PE players. Now, here are some 5 key takeaways from this study. Now, first, it is observed that the IPOs of private equity-backed companies generally come at a premium to the respective sectoral index, while those of the non-premium or non-PE companies come at a discount. Now, the numbers prove that. Now, the PE-backed IPOs have had an average premium of nearly 30% to their respective sectoral index, while a non-PE IPO comes at a discount of almost 13%. Now, it is this valuation gap that leads to the second takeaway, that the annualized outperformance of non-PE IPOs increases compared to those of PE-backed IPOs over a period of time. Now, the annualized outperformance from the IPO price of PE-backed firms is just 1.5%. Now, compare that to the 17.5% that you see for non-PE IPOs. But is this a post-listing phenomenon? Well, not really, because the gulf is evident from the listing gains itself. Now, this is the third takeaway, that the non-PE IPO outperformance is evident from the listing gains itself, because a PE-backed IPO sees an average listing gain of 15.5%. And compare that to a 23% gain that a non-PE IPO sees. But one thing is common between the two is that the post-listing performance or most of the gains come during listing, but the performance post that is subdued. Now, the annualized outperformance from the listing price is a negative 5% for PE-backed IPOs, while for non-PE IPOs it is in the positive, but still a subdued 3.5%. And lastly, the annualized performance from the listing price is more pronounced for non-PE IPOs compared to the PE ones, which also explains the takeaway we highlighted earlier. Now, the annualized performance from the listing price is a good 33% for non-PE IPOs, while for those in the private equity backed space, it's just 21%. Now, so which are the sectors that have added the most in terms of new market cap? Now, well, fintech and financial services, especially considering the number and the size of the IPO that the sector has had, followed by industrials, consumer discretionary, IT, and pharma. So a lot of people would tell you that the price does not matter at the end of the day, but this study has a very clear takeaway that the price does matter after all.
All right, Hormoz, thanks a lot for joining in and filling us in with that interesting piece. Well, let's get in Mitesh Thakkar back on the show. Mitesh, almost done with today's trading action, but what are a couple of trading calls you have for us for our viewers to carry through for the next few days?
So, Nigel, Tata Steel will suggest a STVT. Keep a stop at about levels of 147.5 for targets of 142. And Shree Cement is still going strong and closing at the day's highs. So BTST with the stop at 28,230 for targets of 28,600.
Brilliant. Okay, noted both those two. Sell call on Tata Steel, but Shree Cement doing quite well currently at the high point of the day. Feedback as well suggests that North India demand and pricing has been relatively better. So could be one of the factors why that stock is moving back higher after underperforming the cement pack. By the time we slip on to a short break, come back, we'll get more market talk. We'll have Jai Bala who will be joining in with his strategy on the markets. Welcome back. Well, we've got Jay Bala of cashthekiosk.com who joins us on the show. Hi, Jay. Good afternoon and good to see you. And as always, how are you feeling about the markets? I believe now you're saying that in the near term, it's a little bit hazy. But what does that mean? Where is it headed? Up? Down?
Hi, Nigel. Good to be here. See, as I said, the markets, the reason why I'm saying the markets are a bit hazy is because of the short-term volatility that we saw. The market dropped to 24,180 and then bounced back. But that hasn't disturbed the higher time frame price objective, which I've been maintaining from the 1st of October as the June 4th low, the post-election low. So the markets are heading towards that. Only the very short term on the hourly time frame has been slightly disturbed by the extreme volatility. So the focus is, what do you do? How do you monetize this? You assume the market is already clocked a peak at 24,855, and then assume it's heading lower. In the event that if it were to exceed 24,855, you either take the stop and then reinstate the short once again when the market reaches somewhere about 24,100. If the market doesn't break 24,855, you're already heading lower. So, and that confirmation again will come when the markets break below the 24,180 low that registered a few days ago.
So on the downside, what's the level to watch, Jay? Sorry, just to tie that in.
Yeah, the very short term 24,180, the higher time frame objective, on a progressive fashion, we are looking at 23,264, and then 22,600, and then the June 4th low about 21,300.
Okay, so you're sounding quite cautious actually in the near term on the markets, Jen. That's been your stance as well. But tell us about stocks. I believe this time around you're not mixing things up. You've got two short calls. Run us through both of them.
That's right, Nigel. We have a conditional short on Apollo Hospitals. If you were to trade below 71.65, I think it will trigger the short for this stock. It might have completed a move that started from May 2022 low at the recent high of 2024 high about 75.45. So the objective for this, if it triggers below 71.65, is about 65.80. And the next one is a short call on ICICI Bank. This is a bit aggressive stance. I'm anticipating ICICI Bank to have already topped out. What looks like a very high risk short is actually a risk of about 30-35 rupees and a price to about 12.05. So, although it looks like a high risk, ICICI Bank has come down from the September high in 5 steps, and it looks like a corrective bounce to a recent high of today's high. So, if I'm right, there's a 12:1 risk reward. So, given that ICICI Bank can be attempted as a short through put options, that'll fix the risk that you're taking.
Right.
Okay, all right. Got that, Jay. ICICI Bank. Also on crude, you believe that in the near term it could go a little bit lower, but then it's headed higher from here. What's it suggesting to you? What are the technicals suggesting?
That's right, Nigel. I'm anticipating crude to break below the September low and exceed it by about $3. So that will be a significant bottom for Brent. I'm anticipating both varieties to rally to somewhere close to about 99 to 100 post that. So the very short-term structure is incomplete. Brent has probably already started, or probably it'll touch about 75 and then begin the decline. So opportunities on both sides for Brent, playing short-term shorting opportunity and a medium-term long opportunity once the September low is broken.
No, absolutely. And some of the other stuff, of course, I think is you've had these views, right? The dollar to about 109.5, I think the 10-year to about 5%, right, Jay?
That's right. More than that, there's an important macro that's happened in the last couple of sessions, Prashant. NVIDIA has broken below a significant trend line that started from 2023 low, and it's clocked a head and shoulders top. And interestingly, NVIDIA bottomed in 2023 with the inverse head and shoulders pattern, the reverse of what we are seeing right now. So, it'll be a classic sign if this was also to materialize. And NVIDIA's close on Friday was below the trend line, a full body candle below the trend line. And we have registered a lower low and lower top for NVIDIA. So this is a very significant macro for this AI-driven rally. So watch out for the tech stocks to follow Nvidia, and also Bitcoin, which is a signal of risk on, risk off. Bitcoin is approaching a very close to a terminal top. I had turned bullish on Bitcoin and asked people, your viewers, to take position in Bitcoin and abandon Bank Nifty in October 2023. I'm having a reverse view. There's one sequence of higher high and higher low to come through for Nvidia. Sorry, Bitcoin. Once that happens, it will probably be a terminal high for Bitcoin and a huge bear market that will shave off at least 50% of the peak value.
Ooh, all right. Very quickly then, Jay, before we wind up on the show and have you on markets forward, HDFC Bank didn't participate in the party that was there on Dalal Street, but do you believe that it's topping out in the near term?
That's right. I'm waiting for HDFC Bank to confirm that on a close below 1816 on a daily basis, or about 1796 on a weekly basis. If either were to happen, I think that will be a significant top for HDFC Bank. See, the Nifty's underperformance has been because of Reliance underperforming since August. I pointed that out. Now, and the beneficiary has been Bharti. So if Bharti were to close below 1570, that will bring Bharti to catch up on Reliance, and both of them are likely to exceed the November lows and then bottom out below the November low. So not just HDFC Bank, there are other pivotals of Nifty which are looking quite weak.
Got that, Jay. Stay with us. We're just going to wrap up things here as far as market close is concerned. We're going to come back to you. So you want to just look at how we leave things off. Nifty down, broader markets down, and very few places too. Actually, that's not really correct, because numerically declines outnumber advances by quite a bit. But the advantage of volume-backed gains still very much on the green side, not on what was down. So I'll start with the indices will come up on your screen. There you go. Bank Nifty also down. Mid-cap and small-cap indices lower. No noticeable gainer on the Nifty at all. And of course, on the downside, Shriram Finance, Grasim, Hero, Bharti, IndusInd Bank and JSW Steel were the large cap sort of losers today. On the downside in the broader space, names like HCC, there were names like MGL, TARC, there was news there, PNB Housing, Skipper, NIIT Limited, SBFC, which were down, but it's a fairly decent sort of list of gainers today as well. Najib.
Well, that's right. Actually, the mid-cap index, though it ended down today, it was down close to around 0.7% odd. But there were plenty of winners, actually. Your Jyoti CNC was up 12%. Edelweiss Financial was up close to around 8%. Your Blue Jet Healthcare, that stock was up 8.5%. Enviro Infra, maybe limited float, stock is up 14%, going from strength to strength. Expelio Solutions, stock up 7%. Igarashi Motor as well, up and about in today's trading session. So there was a fair set of winners in today's trading session on a day that, in fact, you had frontline indices that were down. DCM was down close to around 8% though from the broader markets. You had a couple of other notable names like Jyoti Laboratories was down close to around 5%. Landmark Property as well was lower in today's trading session. So quite a few stocks were losing, but otherwise, if you picked the right stock, well, you made some money today. Well, on that note, we'll wrap up on this edition of Closing Bell. You don't go anywhere. Markets Forward comes up next. We'll run you through the day's action as well as get you some trading highlights.